Hi, this is Jeff Bish. I've been a trader for over 20 years, and as co-founder of MarketGauge.com, I hope that by sharing my insights in trading and in the markets, I can help you reach your trading goals. In this video, I want to try and answer a question that we get a lot at MarketGauge, and that is, how do I find stocks that are good for day trading? And there's a combination of two things to get the right answer to that. One is to find a stock when it's in a rhythm or when its personality is conducive to, I would call, easier day trading. And two, that you start with a stock that has enough volatility and volume. Now, the stock you're looking at right here is a 5-minute chart on IBM. And what I tend to do when I pull up a stock that, say, it shows up in a scan or I have another reason to look at it, is I try and get a quick assessment of the stock's personality if I don't already know it. And what I mean by personality is how it trades. Now, a stock will go through different periods where it trades easier or better than other periods. If we look at IBM on a 5-minute chart here, there's a couple of things that would really jump out at me in terms of its difficulty to trade it as a day trader. The first thing I would look for is how many wicks. In other words, the bar above and below the candle body is referred to as the wick. Consider it the white line above or below the green or red box. If you've got a lot of wicks, let me blow this up a little. A lot of wicks on either side of the bar in particular, it means it's rather choppy. Okay, now you will find this in any stock at certain periods of time, but you don't want it to happen all the time. So what I'm talking about when I say wicks and choppy is this in here. Now you'd expect that when it's consolidating, but when it's trending, you really don't want to see that if you can avoid it. And the reason for that is it means that the rhythm just isn't smooth. Now, a bigger heads up red flag for me is when a stock has a pretty significant move for its average range and then immediately reverses it frequently. So a big run up, an immediate reverse, tough to trade. Run down, immediate reverse, and it happens quickly. The motion you want, the immediate is you don't want. So gaps up, runs up, reverses right away. Okay, opens lower, runs all the way up, reverses right away. I mean, you see how quickly that round trip or that from down to up to down happens? That makes it very difficult to trade. Now, IBM is not always going to be like this, but when it or any stock enters a mode that looks like that, you want to step back and say maybe this isn't the right time for it to day trade. Chances are it's in some kind of consolidation and it's trying to figure out which way to go. Another heads up in terms of 5-minute price patterns that I watch out for day trading is what I would call as sleeping bars. Now, what I mean by a sleeping bar is that nobody's trading. So if I look at a 5-minute chart, ISRG here is a $300 stock. It's a fairly volatile stock. It can move a couple dollars very quickly. But the other thing that it can do is absolutely nothing. See this little bar here? Nothing. I'll blow this up. It's literally nobody trading. And that's not a very good or comforting feeling. And in fact, if you see, you got the little bar here and then a gap up, really tiny bar, really tiny bars, and really tiny bars. Now these are 5-minute time frames. Okay, it's not like it's a 1-minute time frame. And while it's not the size of the bar that's important, it's the fact that you can have these tiny bars in the same chart that you have much more, in this case, much more reasonable bars. So if you have a situation, and ISRG I think is almost always like this, where you you have just way too many sleeping bars, like bars where nothing's happening relative to the normal range. Now ISRG happens to have a big average range, so it's not unusual to see a bar, 5-minute bar, that's $1, $2, maybe even $3. But in that environment, you shouldn't have so many bars that are 50 cents. I mean, that's basically the difference between the bid and the offer. Now, if you try and day trade that, you will probably be frustrated with your ability to get in and out of the stock at the prices that you'd want to get into. The last thing you want to look for, or the last thing I'll cover here, is just some kind of a rhythm to the stock. And what I mean by a rhythm is, if you don't worry about the individual bars, and let's go back to IBM. I'm going to go back to the period. So here's the period where I was describing as extremely choppy. There's no real rhythm to this stock. There's no kind of rhyme and reason in terms of it goes up, it takes out the low, it takes out the high, it takes out the low, it chops around, it goes down again, comes up, almost takes out the high, down, takes out the high. It's chopping around. Okay, there's nothing wrong with a stock that goes up and down and up and down, but you want to find stocks that seem to respect support and resistance. And just to illustrate that IBM does get into the mode, doesn't necessarily have to be strongly trending, but that's often the time where you get the best rhythm. But you can see this in this case, moved up, consolidated, moved down gently, moved up, went down, moved up, came down, consolidated. Here's it begins to get choppy, but hold support, consolidate. So there's a rhythm there. Let's look at another stock altogether. Let's take a look at Sun. And the reason I'm going to look at Sun is also because of the fact that if you look at Sun is a pretty good trader in terms of the bars are relatively consistent in size. Now they will tend to get small at times. That's going to happen anywhere. But unlike ISRG, it's consistently just tight, and then it goes into a trend. And then it will start to consolidate and even move up, roll over, move back down in a rhythmic way. Okay? Every stock's going to have big bars and small bars, but you want some consistency to it, and you don't want it to be totally erratic. And you can get that sense from looking at a 5-minute chart. Now, the second part of this, as I said, is finding stocks that have good volatility and good volume. Now, you can do that with a lot of different scanners and selectors, but the way we do it with hot scans is simply to set our basic settings down at the bottom of any table. And you can default to whatever you'd like, but a good rule of thumb, if you're looking for a day trading, you probably want more than a minimum price of 5. I'd probably put 20, but that's up to you and your personality. And I would look for an average volume of 1 million. I frequently actually will go down as low as 500,000. So that should have been 1 million, but as low as 500,000, and an average range of $1. You want stocks that are going to move. So if I put 500,000 and an average range of $1, I'm going to get a list of stocks that are going to give me some good movement. Then I'll look at the 5-minute chart as I just described and see what their personality looks like. And that's a great start for figuring out which stocks you want to day trade. Well, that concludes this lesson. Thank you for watching this video. I hope it helps in your trading. I've kept it short because I believe that if you focus on the nuances of trading price and volume patterns one at a time, you're more likely to absorb it, apply it, and therefore benefit from it. Would you like more? Did you know that this video is only one of a 10-part series that you can get for free? In this series, it will cover various topics that will help you better understand the markets and find great trade setups. If you'd like to receive all 10 videos, simply go to www.marketgauge.com/HS videos. I look forward to sharing the next video with you.